All right, today we're diving into a pretty wild analysis. It argues that a single chart is revealing a massive hidden shift in the silver market. The big claim? That years of alleged price manipulation have just stopped. So let's jump in and see what the charts are telling us. So the analysis kicks off with this really mysterious quote. It's actually from a Sherlock Holmes story, where the biggest clue wasn't something that happened, but something that didn't happen. You're going to see that this idea is key to this whole thing. And here's the mystery at the heart of it all. For about a decade, people who watched this market closely reported seeing this predictable, almost scheduled price drop in silver. But just recently, poof, it's gone. The question our source is asking is, why did the dog stop barking? To figure that out, we first have to understand just how significant this silence really is. According to the source, this isn't just some small change in how the market's behaving. It's a fundamental change to the entire game. Okay, so this is the core thesis right here. The source believes that the absence of this daily price smash is a deliberate act. The theory is that some powerful trading algorithm, supposedly designed to keep a lid on the price of silver, has been turned off. The silence itself is the signal. But to really get what's happening now, we've got to go back and understand what was supposedly happening before. So let's break down the anatomy of this daily event, which traders gave the nickname the tamp. The tamp, or the smackdown as it was called, refers to this very specific moment, usually right when the New York market opened. The source describes just incredible amounts of paper contracts being dumped on the market in seconds, not to get a good price, but for one reason: to crush any rally and keep the price from going up. And for years, this was the playbook. Predictable. The source points to a few key fingerprints of this old era. These sudden, vertical drops, technical patterns called shooting star candles, tons of selling volume, and consistently weak closes to the week on Fridays. It all pointed to this constant downward pressure that seemed to come from nowhere. And that's why the source uses such strong language. They're making the point that this wasn't the behavior of someone just trying to sell their silver for a good price. I mean, think about it. A normal seller wouldn't intentionally crash the price on their own sale. No, they argue this was something else, the signature of someone whose only goal was price suppression, not profit. But that was then. Now the argument is that the entire personality of the silver chart has completely changed in just the last few weeks. So let's look at the evidence for this brand new era. And wow, look at this. It's a complete flip. Everything we just talked about has been replaced by its polar opposite. Instead of those elevator shaft drops, we're seeing a steady staircase of higher lows. Instead of failed rallies, we're getting hammer candles. Heavy selling is now heavy buying, and those weak Fridays have become strong weekly closes. It's night and day. Okay, let's just zoom in on one of these for a second. The hammer candle. This shape is a huge deal. It basically represents a battle within the trading day. Sellers try their best to push the price way down, but then buyers step in with so much force that they soak up all the selling and drive the price right back up. It's a textbook sign that the buyers are now in control. So according to the source, these are the footprints of a new massive buyer in the market. Every little dip gets bought at a higher level than the last one, building a solid floor into the price. There are reports of hidden iceberg orders that absorb tons of selling. And those old sell walls that used to scare everyone away, they've apparently been replaced by buy walls that are now propping the price up. And this quote really just sums it all up, doesn't it? The alleged price suppressor, the so-called sniper, is gone. And with that pressure removed, the market is finally free to act naturally, reacting to real supply and demand instead of some artificial cap. Okay, so the day-to-day patterns have changed. That's clear. But what about the bigger picture? What about the major trends? Now the source zooms out to look at a massive technical signal that it says confirms this new bull market is the real deal. And that signal is the golden cross. If you follow technical analysis, you know this one. It's one of the most famous buy signals out there. What it does is it basically flashes a sign to large trend-following funds that the long-term momentum has officially switched from down to up. It's like a giant green light for the big money to come in. So, to break it down really simply, you've got the short-term trend, which is the 50-day average. It's now rising faster than the long-term, 200-day average. And when that short-term line crosses above the long-term one, it confirms that the new uptrend is real and gaining serious steam. The source argues that in the past, these crosses were always crushed, but this time, it was allowed to happen. And this big signal isn't happening in a vacuum. The source points to other stuff that backs it up. First, a tool called on-balance volume, which measures buying pressure, hit all-time highs before the price did. That's a classic sign of quiet buying. Second, the price smashed through a major downtrend line that had been in place for 13 years. And third, it successfully came back and tested that old ceiling, which is now acting as a new floor of support. And now we get to the grand finale of the analysis. The source zooms out one last time, way out, past the daily charts, past the weekly charts, to this massive multi-decade view that it calls the God chart. 45 years, just let that sink in for a second. That's the timescale we are talking about here. The argument is that we are at the very end of a pattern that has been building for nearly half a century. This is one of those old sayings in technical analysis, and it's absolutely central to this final piece of evidence. The idea is simple. The longer an asset spends building a foundation, a base, the more explosive the breakout is when it finally happens. And this is the pattern they're pointing to, a gigantic cup and handle. The cup started way back at the 1980 peak, went all the way down through the 2000s, and then back up to the rim in 2011. The handle is that 13-year period of suppression that just ended. According to this analysis, we are at the exact moment of breaking out from that handle, right now. And here's the key takeaway. It's all about scale. The argument is that, sure, maybe you can mess with daily price moves, maybe even weekly ones, but you cannot fight the kind of market pressure that's been building up for 45 years. The energy stored in a base that big, the source says, is just too powerful to contain anymore. So, what's the final verdict from this analysis? Why now? Well, the conclusion is that the alleged manipulators didn't suddenly grow a conscience. They simply lost control. The argument is that real global demand for physical silver became so huge that it finally broke the paper pricing game, forcing them to give up and maybe even switch sides. And that leaves us right here with this one last pretty intense question. If this analysis is correct, if a spring that has been coiled and compressed for nearly half a century has just been let go, what happens next? It's a question that puts all this evidence into a really powerful, forward-looking context. We'll leave you to think about that one.